Hey everybody, Brian here from quantlabs.net. Today I just wanted to show you a big step. This is pretty well showcasing all the mechanics of the first phase of this internal trading system with all the mechanics sort of working from within MATLAB. Basically what we've got going on here is I can do queries in my Database Explorer app here. I can do queries against the database for pretty well any type of asset I want. So in this case, I'm looking for only those assets that are part of the Greek exchange on Athens. Now, before I proceed, each and every one of these assets is going to get statistics captured and put into a table and eventually put into an Excel spreadsheet. Now, eventually this will be done all in a fancy schmancy report, a PDF format. Not only that, but I'm still trying to determine the important characteristics that are used to get a long and a short. So what are my metrics that I'm about to show you going to be the strongest for determining what a long is and what the short should be? So in this case, I'm just only focusing on one pair from a particular market sector, a particular geographic region, if it's somewhere in Europe or US. Let alone, I can pretty well do it anywhere I want, as long as Yahoo Finance can track it. Anyways, enough blabbing. So here we got a set of rows from this table that we have captured of 11 stocks. Okay, so we have here the ticker, the name, the exchange, and the country. So we only have 11. I keep that limited because each time I make a request for the data, metrics data, it sends out anywhere from 1 to 2 or even 3 requests to Yahoo based upon, let's say, is there an option set of data for that particular asset. In this case, being Greece, there's no options, not enough info, but I'll show you that in a minute. So that's what we're doing, is we're going to run a script that'll capture all the metrics that we need. So what are those metrics that we're going after? Well, let me just show you our table. This is the final output we're looking at. This is what we're going to be generating. So we have our ticker, we have a full name description. Okay. Not only that, we've also got the exchange, we've got the country it originates from. We've got the mean. This is all statistical data now. We got the mean, the standard deviation, the variance, the skewness. From there, we also are using data for fundamental analysis. We're just going to use EPS, earnings per price per share. We're looking at current, next year, next quarter. That's all issued by the company. Again, all of this is from Yahoo Finance. Not only that, but we also calculate the ATR, the average true range, on a period of 5, 20, 60, and 250. We also, as I said, if we can calculate the volatility, the implied volatility, not historical, implied. 2 different types. I've shown that in another video how that is captured and where I get it from. But we use that. Now, these are all set at 0 because I can't get implied volatility because, well, there's no option data I can work with. So let me run the script and show you the final output. So I'm going to call it Query Greece. What it does, it just reads off of each asset and it calculates all the different data points that I just talked about here. And it takes a little bit. But the power of this is the ability to automate all this. So imagine trying to do this manually. How long would it take you to do? This is the power of automated trading. The scale that this will bring. Not only that, but it will also enable you to do so much analysis. Now, I've also talked about Yahoo Finance. Yahoo Finance only allows so many requests going out to the Yahoo servers, finance servers. So because of that, and I'm only using, like, say, 11 assets, we could get sectors that could have, let's say, 200 assets in the state somewhere. So eventually, the data source, data feed will be moved over IKV because I can probably pretty well analyze that to my heart's content. So here we are, we're all done, yay. And we have here a file that gets generated, an Excel file. Okay, let me just show you that file. It's this guy right here, I call it the Greek gift. And here it is in Excel. Okay, so I'll put this up as a sampling of what's available. Again, imagine the power of this. So again, what we got here capturing is mean, standard deviation, variance, skewness, earnings per share current, next year. We also have next quarter, market cap, ATR 5 period, 20 day, 60 day, 250 day, and 2 implied volatilities. Okay? So hopefully this will make sense to you, because now what we're trying to do, and I've got a meetup coming up on this to determine what people would think should be the criteria that will make the long in this view as well as the short. We don't care about the middle stuff. We care about maximizing our return. So when you use this data we got here to determine what the long will be, and I need to know how to weight all that. Got any ideas? Let me know. Talk to you later.